Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Bull versus Bear Trade Day webinar in here for Wednesday, the 16th of March with Steve Miley on the call. So welcome, everyone. As our usual run through in here today, calendar, what we've had, what we've got coming up. We'll take a look at articles from the major news wires. What are the main events impacting markets right now? And then we'll take a look at the charts. Let's kick off with the calendar. Well, despite what we've got coming up, we'll run through what we've got coming up. It's all going to be all eyes on the Fed, and a lot of the articles focusing on the Fed today. So Fed, 2 p.m. Eastern time, so 1 p.m. Central. If you're in the UK, we are now, it's going to be at 6 p.m. Usually it's 7 p.m. London time. UK time, it's going to be 6 p.m. And if you're in Central European time, it's going to be 7 p.m. So a little earlier because that 4-hour difference, remember, only a 4, you can see it up here, only a 4-hour difference between GMT at the moment and Eastern time. So, but ahead of there, we do get retail sales. So we get core retail sales, probably the biggest data point of the week, being overshadowed, though, by the Fed and obviously the bigger geopolitical events that are going on, but overshadowed by the Fed, but the core retail sales data. So do keep an eye on that. That can be important. It'd be interesting to see where that comes out today. If you're looking at Canadian dollar, we do have people trading the currencies. Then don't forget to look at the key core CPI data coming out of Canada at the same time. So retail sales and Canadian CPI out in just under 1 hour. Let's move on as well. We've also got business inventory data and then crude oil inventories later today. Crude oil inventory is probably not going to be too impacted in here. Obviously, the bigger geopolitical events impacting oil more than the oil inventories in here, but that could be interesting also. But in here, interest rate projections, FOMC economic projections, FOMC statement, interest rate decision, all at 2 p.m. Eastern, 1 p.m. Central, and as I say, 6 o'clock on the GMT. And then we have the press conference 30 minutes later at 2:30 Eastern. Employment report out of the Australia overnight, probably not going to impact too much in here, apart from if you're trading the Australian currency. So that's the tail of the tape, what we've got coming up. Let's run through some of the articles in here. There's kind of like 3 major things for us to focus on in here today. One is Fed hike day. Expected in here, nailed on for a 25 basis point hike in here. First rate hike since 2018, trying to counter inflation. If we go take a look at what futures are pricing in now for today, we have like nailed on 96% now for a 25 basis point hike and a slight outside chance of more, but pretty much nailed on for a 25 basis point hike. If we go and take a look at now in here, on the going into the next meeting, which is out in May, beginning of May, we have now 20 and priced in for another 25 on top of the 25 we're expecting from today at the meeting, but only a 45% chance, with more of a chance of a bigger move higher so more of a chance of now a 50 basis point, a 0.5% rise at the May meeting. So that's interesting as well. What else do we have going on? So it is about Fed. I'll run through some articles. There's loads of stuff out there on the Fed. But the other 2 things in here we've got is some signs of hope. Okay. Ukraine's Zelensky said Russia's positions in the negotiations sound more realistic. Over the last 1 to 2 to 3 days, we're certainly seeing some partial positivity coming out from the talks from fairly high level sources as well. Obviously Zelensky is very high level source. Putin has mentioned some stuff, so we're getting certainly more of a positive. Zelensky as well said yesterday that that Ukraine would not be looking to be part of NATO. So already that's already way on the table. So yeah, we've got some definitely positivity coming on the talks, and that's buoyed markets in here over the on the riskier assets. Equity markets have rallied. Equity markets, riskier assets going higher, and safe haven assets dipping slightly lower in here over the last 24 hours. And you've also had in here the commodity markets recoiling even deeper lower in here. So what else we got going on? The other really big event we've had in here overnight has been that China's stocks, having been under immense pressure for the last 2 sessions in here, big sell-off. We've seen a massive rebound in Chinese stocks. The government vowed policies to support financial markets, boost economic growth. And so we're seeing a really big rebound. Some of the really big stocks have rebounded 20%. The other thing to note is that nickel ended soon after it began in the London Metals Exchange. So nickel's been shut for a week. In here because of the surge in nickel prices that we saw last week on the LME, the London Metals Exchange, and then the market triggered limit down when it reopened today. So but the big positives in here we've got so the big three things to focus on is obviously we've got Fed. We've got more upbeat soundings from the talks between Ukraine and Russia, and we've got the Chinese markets having a really super strong rebound, having had a really significant sell-off in the last 2 days, and that's buoyed markets, stock indices, and riskier assets, not only yesterday but got them through into this morning, to the European sessions and the Asian sessions. Fed obviously in focus, and they're focusing on that in here, and we're getting all the economic projections as well. So it's going to be a really significant day for data in here. Right, and then if we go and take a look in here on the Reuters, this is their equivalent of the 5 things, called morning bid. So morning bid on Reuters, and on the morning bid, they're looking at similar things in here. So all eyes on the Fed, 25 basis points pretty nailed in here, and then policy statement, and also economic and interest rate predictions, dot plot chart. We're going to be watching that. The other thing I wanted to mention as well, but this is kind of pretty much priced in already. I don't think it's going to be a big shock to the market. So Russia today on the brink of what could be its first international debt default since the Bolshevik Revolution over a century ago. $117.2 million of interest payments is due on $2 denominated euro bonds, and it said they will make payments in rubles if sanctions prevent it from paying in dollars. So and then markets would see that as a default. So so that's going to be interesting to see what goes on with that. Maybe over the next 24 hours, but probably not going to really significantly impact markets. And they're also talking about the Chinese stocks in here surging back higher, measures to boost the economy. Let's just run through some of the headlines. Futures climbers, Ukraine talks, China lift mood, out of Bloomberg. China market strong. China makes strong vow to ease crackdowns after market turmoil. Chinese stocks in the US surge after state support. Alibaba, JD.com both saw 20% in US pre-market. So all of these are fueling the price moves higher. European stocks having had a super strong day yesterday, even stronger today. Look at this. We've got some of the indices up 3.5%. French CAC nearly 3.5%. The DAX 3.25%. FTSE is up over 1% in here today. Spain up 2%. So European stocks super strong in here this morning. And if we take a look at the US stocks in here, a really good day yesterday. And I posted on the site, I posted on our social media as well. We'll take a look at when we come to the charts. We have really positive signals on all the major indices yesterday, key reversal days, and I'll talk about that, key bullish reversal days on the Dow Jones, the Nasdaq, and the S&P. And you can see in here we were up 1.88% yesterday on the cash index on the Dow. The S&P cash index is up over 2%, and then this morning still higher. The Dow and the S&P E-minis in here up over 1%, and the Nasdaq at one point today was up basically 2%, up 1.7% in here now. So strong follow throughs given the super strong gains that we saw yesterday. And further headlines in here, Wall Street jumps as S&P snaps 3-day slump. That was from yesterday. And then European stocks hits 2-week highs on China stimulus promise. And then further, it's all the same stuff. World stocks recover on Ukraine talks. Fed hopes buoy US yields. And then, so all the same stuff. All systems go for the Fed's lift off, so focus on the Fed. And then we had this from Forex Live, Lavrov in here. So Lavrov is the Russian foreign secretary. I think that's right. Yeah, pretty sure. Peace talks for Ukraine aren't easy, but there is certain hope for compromise. So that's positivity as well. Okay. Some formulations of agreements with Ukraine are close to being agreed. So then that's all very positive in here. And we've already looked at this. Let's take a look at some charts. Let's take a look at some charts. So yesterday I flagged on social media, I put them up on the site as well in some of the forums before these markets. So the Dow was the first to make the signal. Let's go take a look at the Dow E-mini future in here. So we had this outside pattern. So an outside pattern is when you get a lower low and a higher high. It's similar to a candlestick engulfing pattern, but it's about the highs and lows rather than the body, which is the opens and closes. And you often these days don't get many engulfing patterns in stock indices or in any actually markets, because most markets these days are 24 hours, and because they're 24 hours, the opens and the closes are often at the same prices. I know we do get a break in here where the market is actually closed, but you don't get nearly as many because we get an engulfing day here. Look, because on this one back here, but we didn't get it yesterday. It wasn't an engulfing day on the Dow because the open wasn't below the close here from the previous day, from Monday. But nevertheless, it's a bullish outside day. An outside day means it's a lower low and a higher high than the previous day. And when I posted yesterday, with like a couple of hours to the close, the Dow had already made that bullish statement. It already had a bullish outside day. And that's often a key reversal day. So the market's often been trailing lower for 3 days, and then it's signaled a bullish reversal. Now on the Dow, we've actually got you've got these succession of higher lows in here. So you got the February low, then we had this March low, and then you got this next March low from yesterday. So all of that are real positive. And if you look in here on the Dow, don't often focus on the Dow. Not as many people trading the Dow for whatever reasons. But if we go and take a look at the Dow in here, you've got this kind of triangle pattern kind of forming down here. This kind of and a potential breakout. Market's already broken out from this like triangle pattern in here also. So it broke out through this kind of triangle consolidation up to the upside, kind of like a symmetrical triangle, usually a continuation pattern. It would be a continuation of this downtrend, but in this case turns out to be a reversal pattern. But obviously breaks above this high all the way up here, which is some way away. 3rd of March high on the Dow, that's up at 34,018. If it takes that out, then you've got a double bottom, right? Low here and the low here. These are close enough together to be a double bottom if it gets up through here. It's interesting, the formation here, you got higher lows in here. Now if you compare, so we already had that when I posted, but then what happened was the S&P and the Nasdaq joined the party. So when I posted, we were down like here somewhere, trading below Monday's low, and then we managed to surge higher. You ran some stops up through Monday's low. By the looks of it, there was an acceleration higher going into towards the close, and then the market puts this key reversal day. So again in here, we had 3 down days. It's a key reversal day, but also I think what's really important here, not only is it a bullish outside day, again it doesn't quite make a bullish engulfing. This bar, the body doesn't quite engulf the body in here because this open is slightly higher than the close that we had from Monday. The open from yesterday, was 71.25, and then the close was it's actually exactly the same. So this is rolled straight over, so that doesn't really count as an outside, as an engulfing pattern. But nevertheless, what's really significant is we kind of held it. We just pipped below this low, the low from earlier in March. From the 8th was 41.30 We just got below that, down to 29.5. I mean, just got below that. Not even a whole index point below, and the market rebounds. Okay, so it's kind of defended this low. So again, you've got this kind of basing pattern forming in here, and really super strong, a key reversal day. Now, this key reversal day could be not only key reversing the last 3 days, but it could be reversing the whole sell-off that we've seen in March, and it could be a key reversal day for the whole downtrend. That could be the signal that, obviously this would be the bottom, but that could be the signal that the bottom's in. Okay, and again in here, if you put on the little kind of triangle in here, well, it doesn't quite work through here because it kind of broke through the bottom. So you've got a fake out on the downside, breaking to the bottom, and now we've got also then the market. If you look at this similar, whether you take it through here, we broke through, and then you've also got through from this high from February in here, whichever one you take in here. The market's breaking, actually not quite breaking that one, just try to test that one there. The one, this is off the February the 10th high and the March the 3rd high in here. So the market flirting with that one on the S&P. So certainly setting up more bullish on these bigger charts. And then finally we take a look at the Nasdaq on the daily as well. Again in here, when I posted, we were down here, sprint higher, strong close. And really interested in the Nasdaq now, the market did undercut, not only undercut the Monday's low, but it undercut the actual low in here from February, undercut the February low, so you went to a new low, and then this is even a more emphatic statement, because then you've actually made a new multi-month low in here. So the market says low, well, we can't see back in here, but a multi-month low in here on the Nasdaq, okay, and then the market rejects that super strong reversal on the upside, and then so it's rejecting the break below the low in there. You got a load of shorts sucked in down here, right? Some weak shorts sucked into the market, and now the market's rejected them, and obviously significantly higher again this morning. And again in here, if we put some of the down trend lines on in here, this one's not going to be too useful at the moment. But if we go put some of the more accelerated ones, so this comes off the peak from the 10th, the similar one that we had there. We're not quite there yet on the one from the 10th, but we are through this more accelerated one that comes us down from the 3rd of March through here. So we're through that. So up above these peaks in here, I think it's going to be really important for the Nasdaq. Obviously we've already had a really big day already. So, but it still feels to me there's more in this. If you look at the daily RSI, nowhere near overbought on any of these. Let's step in. While we're on the Nasdaq, I'll step in now and go into like a 30-minute chart. And you can see in here, look, basing pattern. This is now certainly looks like a strong basing pattern, really strong rally yesterday, and then again in here today. And the market looks super strong for me. I really think there's more upside in here. Any kind of dip you kind of buy into. There's no real trigger point now until on the upside until all the way up on that 11th of March high. So I don't really want to wait to buy it here, but you necessarily want to buy it here where we are right now. I think it just breaks high. You just go with it now. The problem is the market's probably going to take into consideration the retail sales, and between retail sales and the Fed, it's probably going to be very quiet. Unless we get something out of Ukraine, Russia-Ukraine, I don't think, once we get retail sales out of the way, this is probably going to, if anything, retrace lower. For me, there would be a buy opportunity, yeah? But then you're going into the Fed. By the way, let's talk about the Fed. I would, sincerely say to you guys, don't hold positions into the Fed, right? I know it's really tempting. There's a buck to make. You'd be better off having a little bit of slippage and putting a buy entry stop. Yeah, if you're bullish, feel that the Fed's going to, and then remember that we've got various things. You've got the press conference, you've got the projections, you've got lots of things. There's a lot of information, so this could whipsaw. So you have to, even if you have a stop entry through the Fed, you have to be careful because there's lots of pieces of information all coming, all at the same time, and then 30 minutes later a load more information. So you have to be really careful in here because the market can easily whipsaw. Some of the information might be bullish, some of the information might be bearish. The market might take it one way or the other way. Is it going to stoke? Are they more concerned about inflation? Or are they more concerned about Ukraine, Russia? And recessionary pressures, the whole stagflation thing. We've got, there's potentially pulling in two directions now. We could really see the doves and the hawks within the Fed start to pull against each other. So be really careful, guys. This could really whipsaw through the Fed. Don't want to see you guys getting stopped out. The guys on the evaluation challenge, just hit, draw down numbers or whatever and getting resets and paying for resets. And let's kind of control ourselves for it, guys, right? Let's try and step back, keep calm, right? Don't have the position on into the Fed, react to the Fed. If it starts going, maybe put an entry stop, give yourself a bit of room, have trade much smaller size. It's probably going to be choppy. Yeah, it's kind of not only is a big event, it's the first rate hike since 2018, right? So it's a significant event. We're getting lots of different pieces of data, lots of pieces of information. So you probably need a bigger, the market's potentially going to move quite a lot. It's already moved a lot yesterday and today, could even move significantly more. Really big day. Okay. So try to, if you do have stop entry, I would say don't have a position going into it. If you want to have a stop entry, put a stop entry position in. You can do that, okay, or be sitting there with your finger on the mouse and ready. But give yourself some room on the stop. So trade much. That means trade smaller. It doesn't mean trade your normal side. Trade the micros, yeah, not the minis. Go and trade the micros, smaller size, okay? Just get it right rather than trying to make a massive profit on it, okay? If it starts going your way with the micros, you can add in, all right? So that's what I would suggest. That's my suggestion. So this all looks really bullish. If you go and look at any of these charts, they're going to be, but entry at the moment is not, I would say it's not good for entry because we're, basically up on the daily highs, right? We've not had any real significant setbacks in here. You had the really strong day yesterday, really strong close, and then the market then sideways. And then since this morning, European time, we've had a really strong rally right through the day, pretty much non-stop, and we're sitting near the highs. It's really, we want to wait for maybe a setback on retail sales. I wouldn't be reversing, trying to go against this. Wouldn't play contrarian at the moment. Definitely don't want to be looking at doing that. And the next trigger point is all the way up here. So this is that 11th of March high. And if it breaks through there, then you've got like, potential down here, 1, 2, 3, triple bottom pattern in. Okay, so again in here, I would strongly suggest, let's get rid of all these old tools. I would strongly suggest, being careful through the Fed, but also being patient. Please try and be patient. Okay, there will be opportunities today, but right now I don't think it's a great opportunity. I'm bullish. I've been bigger picture bullish anyway. I'm kind of bullish going into today, but I wouldn't be buying it here, right? I wouldn't be buying it here right now. Okay, so and it's the same story. I've already looked at the Nasdaq in here. It's the same story if you go take a look at the Dow. So look right up on the highs. And if anything, the Dow is the much stronger chart. Looks really strong in this. Looks like a really big, strong basing pattern for the Dow. Yeah, and lots of upside. Again, that 11th, actually that's the 3rd of March. We're already through the 11th. There's the 11th of March high. So much stronger pattern from the Dow. And you got the 3rd of March high now in focus for the Dow. So yeah, all looking very bullish in here. Let's have a quick nod to the, where are we? The commodity markets. I do think there's opportunity here, probably better opportunities here. So here's oil on the daily, big sell-offs in here that we saw Monday through Tuesday. The market's rebounding and starting to fail. I think there is an opportunity here. And if it goes to the 30-minute chart now on oil, look, there's the rebound. Look, remember that we put this trend line on yesterday? It's a really good trend line. The market's come up towards that trend line and failed. Yeah, failed low and trying a little bounce now. I think, given we're above the low in here from yesterday, I think there is an opportunity here. Anything back up in this region here for oil, 90, somewhere, I don't know, 97 through to 98.5 is a sell zone in here. Or if it breaks below the current low in here from this morning there, that's at 94.82. Okay, I think those are sell opportunities in the moment for oil. Let's take a look at gold. These on the April contracts, by the way. Let's take a look at gold in here, and you can see on gold, again, similar sort of thing, yeah. Big sell-off the last 2 days, just rebound, and actually gold is still rebounding a little bit in here. So let's step in and look at the 30-minute. Yeah, so gold's still rebounding. We're actually reverse these trend lines in here on gold. Reverse these 2 trend lines. As long as it's below this high, if it gets above that high, there's an opportunity to maybe go long on gold. So maybe the other opportunity in here. So that high there is from yesterday. It's at 1932.8, and the high so far this morning 27.6. Whilst it's below 32.8, I would venture a short. If it goes above 32.8 and then quickly fails, again short. If it goes above 32.8 and holds, long. Okay, that would be my view on here, because you've got a little basing pattern to reverse these more accelerated trend lines that come down from the beginning of this week. It's actually the end of last week. Yeah. So there we go, guys. I'm going to leave it there. If there are any questions, throw them in the chat right now. If not, I will wrap us up. I'm going to wish you all a great trading day as ever. Please be careful through the Fed. Trade the micros, stop entries, don't hold anything into the Fed. Got retail sales, maybe looking for a little bit of an opportunity through retail sales today, and maybe some small opportunities ahead of the Fed, but then really it's all going to be on the Fed. At your desk, not trading off your phone through the Fed if you can. At your desk, maybe if you do have stop entry levels on the Fed, then make sure you have a decent stop, a slightly bigger stop size, because it could be choppy and whipsaw, and then also keep in mind that all that different data information, it could be choppy, but there could be some good opportunities. So I'm not saying don't trade it. I'm saying just be cautious, be careful, trade the micros. All right, guys, have a great trading day. Take care. See you tomorrow. See how actually James. You have James tomorrow. I'm not around tomorrow, so James will be picking the bones out of the Fed with you on tomorrow's Bull versus Bear webinar. Bye.